Hello, fellow traders. This is TheRumpledOne coming to you on Wednesday, August the 28th, years 2024. Let's talk trading. What the market teaches, part 3. These videos are for educational purposes only. Your results may differ from mine. And a friendly reminder, as we're in the middle of the last trading week of the month of August, have your risk management in place. Do not lose any more than you're willing to lose on any one single trade. Now, we've been talking about what the market teaches. And one of the things about the market or life or reality is it's not what you think it is, and it's not what you believe it is. It is what it is. And so what you need to do is you need to align your thoughts and beliefs with the reality or with life or with the market. And for some people, it's extremely difficult. I know sometimes when I make these videos and we talk about things, and Walmal's on here and he talks about things, a lot of things seem so obvious. But the thing is, it's only when you're thinking about them that they're obvious. What happens is that maybe you're lulled into a stupor or a sleep, or you're just not really paying attention, and then you get smacked in the face, and then it's like, oh, Harry hindsight, you should have seen it, right? So what do we do about it? What's the market teaching us? How do we look at the market? And when we say market, what we're looking at is a representation of the market. That's all the charts are. It's just a representation. Don't confuse the map with the territory. And so, we put up horizontal lines and squiggly lines and dots and diamonds and draw rectangles, and we draw trend lines and all this other stuff. Fibonacci levels, support and resistance areas, supply, demand, order blocks, imbalance, you name it. But these are all mental constructs. They really are. And the reason I'm laughing is because it's so easy to get suckered into these things. And every now and then, somebody will stumble across my YouTube channel or one of the places where I've posted something out on the internet about trading. And it's just like, is it really that simple? And the answer is yes. And they're like, you mean I don't need all this other stuff? And the answer is yes. So what you have to do is, once again, just look at the reality. I mean, right now I just noticed we're putting in new lows for the day here. Price is bouncing. And so when we're analyzing the market, and we're trying to see if something has changed to such a degree that we need to change or adjust to the market, what do we do? Well, Walmal says he likes to measure the range, basically from high to low. And so one of the things that I did way back when I was trading stocks and I came up with the buy zone, and I ran statistics, high minus open, that's like half, or that's part of the range. That's the range above the open, and open minus low, that's the range below. I started analyzing that, not just range, but I broke it up. And then I realized that, price had a tendency that if it went X, it had a high probability, or high, I should say, statistical history rather than probability, that it would go to Y. Now, the reason I make that distinction is because probability deals with the future and statistics deals with the past. And in trading, there is no probability. And that's something that a lot of traders don't understand. And I just noticed, looks like we're pushing the range here a tad bit. So, those are things to look at. And, I use the frequency distribution indicator that I've written and modified some more and modified some more after that. So in this case, we're looking at the high minus low. I've got it on M30 right now. But as I mentioned, we can change over. And if we look at open, oops, that should be open. Open minus the low, and we can actually switch it over to the daily. Well, you can see here, greater than 50, 21% of the time. And this isn't cumulative, so what we can also do, let's run it as cumulative, so we can see how. So chances are open minus low is going to be greater than 5. Out of the last 100 days, it was greater than 5 82 times, greater than 10 67. So you might say, if you just went short and you went for 10 pips at the open, out of the last 100 days, 67 times you could have popped out with 10 pips or more. I mean, it's things like that. So if you look at this, and if all of a sudden you start seeing these numbers change, then you know something's up. So for example, with the rat zone, instead of open minus low, it's close minus low. In other words, it went down, made a low, and then it popped back up. See here, 6 out of the last 100, it was greater than 20. So the question is, once again, when you're looking at the rat zone, and for some reason my computer's freezing, not sure why. So this edge and this edge, that's the 20 mark. But then you can see here the different colors. This is the smart rat, because this looks at those numbers every day and readjusts this difference. So 20% of the time stays in here, 20% of the time stays in here, and the rest it leaves. So as you can see, it's putting in new lows. It's crossing it crossed over or below the 1.3200 number. And you can see here it's pushed back up a couple of times. So, this is how to analyze the market. So Smart Rat, that indicator, just does it for you. So you can see, hey, you know what? These zones are shrinking. So when I first started it, they were closer to here. But now you can see, because of the compression of the market, things have changed. So that's another way of analyzing the market. And, I like to also look at the pivots, how many times in a row, 2 days in a row, missed pivots, 3 days or 4 days in a row, out of the last 5,000, I believe. So that's a lot of data. Now, you might want to tone that down, maybe only look at the last, 250 days, trading days worth of data, or the last 100, just to see what's happening. And then, I'm listing out the ones so you can see how many times this year it's missed. And then once again, moving up to the week, You can see here, we've got 3 missed pivots. We've got one this week so far. That could get taken out though. And we've got one back in April. So weekly, those pivots usually get taken out. Sometimes it takes weeks to do it. And then ditto for the monthly, you got to go back 2 years for a missed monthly pivot. So the thing is, the market, teaches us that if you don't look at reality, you're going to probably sustain losses. That's a big lesson. And another lesson the market teaches is patience. You wait for things to develop. So in this example, you can see all this stuff happening here. Well, until these squiggly lines line up accordingly and you get your signal, you just have to sit on your hands and wait. You don't take the trade in that particular method. And you might look and go, well, I'm missing out on it. Well, yeah, but you could be missing out on losses too. Why? Because you didn't get your signal. And the thing about trading in the market is another trader has been talking about edge. Does it have an edge? Does it have an edge? Well, the thing about trading is it may have an edge, but the thing is you can mess it up, because if you don't do what you're supposed to do when you're supposed to do it, you miss out. You lose your edge. You destroy the edge, because that one trade that you didn't enter, or you entered late, might have been the trade that made all the difference. But if you missed it, you missed it. And if you jump in too late, you could get chopped. So that's just another thing, and that's why I told that particular trader to work on the psychology. You have to work on making you, trade like a machine. And then, of course, they were asking about back testing, and they were asking about, making EAs. It's just like, they're really difficult to do, because unless you have a target, meaning make X number of pips or X number of dollars and then quit and come back tomorrow, that's part of the discipline. That's part of learning the market, because that's pretty much what Walmart does. Sometimes, he has his 17 pips or whatever he wants to make every day, and he makes it, and then sometimes he'll continue trading, but he'll maybe only take the really obvious, easy, almost can't miss trades. But, as I've mentioned before, the turtles proved it. You can teach 100 traders the same system at the same time, the exact same way. And there's going to be some that are very successful, some are going to fail, and some are going to be moderately successful. They could all be trading the exact same instrument, the exact same pair or stock or commodity or whatever. Point is that you are a big part of that equation. And if you can't get your mind right, as the captain said in Cool Hand Luke, it's just going to be a mess. And so, even a simple system like this is telling you something. Over the short term, prices going down. And, you might have seen everything line up perfectly here, but it didn't pop above it. And so you have to look to the left and go, wait a minute, I'm not clearing these wicks. And at the last time, the sellers pushed it back down. So market's telling you something. It's teaching you something. You just have to learn the lesson. And part of it's knowing what to look for. And, that's why I make these videos, to help you trade what you see. So, fellow traders, let me know if you still have more questions. Like I said, I think when Walmart comes back, we will revisit this. In the meantime, it's not what you trade, It's how you trade it. So go out there and drain the banks. This is the TheRumpledOne.